As famously said by Bernard Burruck, nobody ever went broke by taking a profit. In an upswinging, downswinging or unpredictable market where visibility is an issue, this hits the heart of where investment focus should always be, on the downside risk of a deal and how that downside risk has been mitigated. When the downside is mitigated in the first instance, the upside takes care of itself. One of the quickest and the most profitable deals we ever did turned around in 2 weeks from initial review to finalisation of documentation and financial close. The speed of execution was on the basis of the downside risk having been mitigated in such a way that we were comfortable to act with a level of speed that secured us the deal. The deal was the construction financing of 2 townhouse developments of about 50 townhouses in Brisbane, which were already funded by a group we'd worked with several times before and had a long and successful long-term working relationship with. The group had a short-term cash flow gap and came to us to take over a part of their position on the construction funding. The townhouses were fully pre-sold to owner-occupiers, and since the date of sale, the market had improved. The result was that the townhouses had increased in value by 15%. This meant that from a settlement risk perspective, buyers would have no trouble getting funding on settlement and completion of the project given the increase in value from the sales date to the settlement date. As a townhouse project, there were less complicated groundworks required and a less complicated building structure when compared with the construction of a high-rise apartment project. With the groundworks complete, the slab was poured and the frames were starting to be constructed, which meant that groundworks risks, often the highest risks of construction, were removed from the deal. The senior debt bank funding was fully in place and already drawn down, meaning we had full visibility of the facility and cost and terms. The Progress Control Group reports and minutes were readily available for review, and a review of the project feasibility, forecast versus actual drawdowns, demonstrated a project which was running to plan, on time and on budget with no cost overruns, and the riskiest part of construction was complete. The developer had significant personal assets, and we were being offered personal guarantees on our capital, as well as substantial corporate guarantees from the incumbent financier who needed to bridge their capital. We expedited our detailed due diligence process and promptly executed the deal. We were repaid on time and in line with the forecast return of approximately 20% per annum. As a result of our acute view on the downside risks, we were able to act quickly to carry out detailed due diligence and take advantage of an opportunity where downside risks were robustly mitigated and skewed heavily to the advantage of the investor. The transaction created a balanced and win-win outcome for each party involved. Sign up to the MP Report Premium for a deep dive into this transaction, as well as a detailed market and deal analysis. For visibility to the MP Funds Management co-investment deal flow, sign up to the MP Report Premium. MP Funds Management has provided investment funding for over $1.3 billion in investment-grade real estate transactions. These transactions have produced an average annual return of 22%, with the lowest being 9% and the highest being 42%. With the MP Report Premium subscription, you can expect exclusive visibility into co-investment deal flow with MP Funds Management, in-depth analysis of completed deals, detailed market analysis, and premium interview content. Sign up to the MP Report Premium via the MP Report website.